So, trading psychology, we all hear about it, we all use it, but I want to kind of get into the importance of what counts. And what counts in trading psychology, first of all, is the main emotions you're going to have. And there's a list of them. You're going to have fear and greed as the main pullers. There's going to be other subdivisions of emotions that you'll have in the markets, but those are the big pillars. Greed, which is going to be based on our foundations coming into the industry. That's going to be anchors outside of our life. Foundations coming in is the reason you got into the industry. If you came in to have a lavish lifestyle, and trading is not a thing where you're bringing value to the world. It's very just self-sufficient. I want to make money for myself. It's not a business. It's not an entity. So it's always going to be with those parameters of money orientated and greed orientated. And especially if you are falling for the traps of the industry, you'll definitely be very orientated towards high gains. And especially when you add in hope, and then you add in desire, and then you add in sort of desperations from anchors outside of your life, that's going to be from a perspective of you've got bills to pay and so forth. So greed is a big one. Another big one is fear. And that's what I want to speak about today, is the origins of fear and what truly is fear in the markets. Because as you know, there's no inherent threat that the market presents. Fear is an evolutionary trait, or a trait that we have as humans, which is a response that we have, or a stimulus response that we have to a perceived threat. And therefore it's a defense mechanism to protect ourselves. So we have to understand what fear truly is to then first of all address how we can improve it in the markets. So before we get into that, just overall trading psychology, I've spoken about it very vocally online that I'm not a big believer that trading psychology is as important as people make out it to be. The reason I say that is because people are trying to build psychology improvements, and they're trying to find solutions towards their psychology before having a predefined, proven, data-driven technical edge. And that can be very problematic, especially if you have a non-profitable edge. You have a system that's not even defined. If you haven't solved your technicals, and then you first go to scapegoat the situation and try and resolve your trading psychology, it's going to be quite a problem, because you're trying to reinforce mental beliefs, you're trying to build belief systems, you're trying to improve your mindset upon a flawed system. So when your flawed system gives you negative results, you're going to be in more and more despair, because your psychology is going to be more of a reactive burden, because at least you don't have, well, if you don't have an edge, at least you can blame your psychology. The moment you dial in your psychology and you still don't make profit, you lose that hope altogether, and it can be rather a spiraling detrimental effect. So first of all, it's very important, it's paramount to first of all improve your technicals and actually find and define the edge. Improving your technicals doesn't actually mean like you have to be a master, a textbook, or truly understand everything from a technical perspective. It's simply having results based on a predefined edge. That predefined edge can be a rather simple, systematic approach. It can be just a system that can have an edge, as I've spoken about many times. If you have trend on your side, 1 hour structure on your side, 1 hour point of interest, inside that 1 hour point of interest, you have an inducement on M5 or M1, and you refine it down to that M5, M1 zone. When price arrives to that M1, M5 zone, it arrives during a London session after doing a smart money trap and a sweep of Asia high. When it's in London Open in that refined zone, it gives an M1 BOS, and that gives you an entry. That will be a high win rate, high risk to reward, highly probable trade that will have a low trade frequency. But just that alone, which is, I could teach it to a 10-year-old to, find these markers and actually wait for that to happen. It's very simple to understand technicals. The complications is when you want to be a trader that has a diverse type of trades they can take, because they want to satiate their desire to be in the market more. So that's when you'll introduce more trade models, or what an amateur trader will do is they'll just bring in confluences and things they learn in theory and throw it at the market pretty much every day and see what works. That's a recipe for disaster. But let's say you're more of a refined trader, you have trade models now. Specifically, less trade models is usually going to be more serving. You're just going to have a low trade frequency. You can balance your trade frequency with trading more things or trading more often, but that, obviously that increases your trade frequency. Now I digress. The main point of this is, once you've got that predefined edge, once you've got a proven system, psychology does become important to address, specifically fear. Now, one last thing I want to mention before we get into the topic of fear and where it comes from, what amplifies it, and how to address it, is understanding that your technicals can also be serving of psychology. Now, what I mean by that is, if you are someone that's very greedy, if you're someone that's very fearful in the market, and you have a lot of voices in your head as you're entering the market or as you're approaching a session, you can actually use your technicals to help you. For example, if you have a system that allows you to break even very quick, It means you can take a shot and break even and protect yourself and be in a free trade very aggressively, very quickly. That's obviously going to help your mindset. If you're someone that doesn't like being wrong often and you consider break even as wrong, and you just need to be, whenever you're in the market, it needs to hit take profit, but it's going to be rare. Okay, you can adjust your system towards that, where you only take prime setups, you allow price to breathe, you have a bigger stop loss, you don't focus on risk to reward, you just focus on, once you get in, eventually you have a low risk to reward, low pip count trade that is a positive outcome. You can orientate a system to satiate any problem you have. My system, for example, is tap and go. I want to get in and be in profit within 10 minutes or stop loss within 10 minutes. That tap and go system gives me a positive feedback loop very quick. I know the result of my decision very quick, and therefore I'm not hanging in indecision and waiting and overthinking things. I realized that was a problem for me. I built a system to address it. And if you have a system where you partial early, therefore you pay for your next trade, you find out the result very quickly, therefore your emotions are satiated. You're not in consolidation for 3 days and making wrong decisions. You're not having heavy 50% retracements, which in theory that is fine. 50% retracement is quite normal. But that when you have big dollar amounts there, that can actually be quite emotional. So I don't want to be in these kind of situations where I have M15 structure, M15 retracement, M15 continuation. Because in that retracement, I might mess it up and exit the trade because I panic, because I see the numbers going down. So if I build a system that's very intra-session based, very aggressive entry type, very aggressive break even, going for high risk reward and a high trade frequency, that solves basically all of the emotions that I have in the markets. So that's one angle I want to take this, which is, I never sat down, to be honest. I mean, I've read a lot of books. I've studied psychology. In fact, at my university degree of dentistry, I had a whole module on psychology. And it's actually quite an important module, because when I'm dealing with children, when I'm dealing with patients with trauma, that's actually fear. And actually, when you have a phobia is defined by an irrational fear. So a lot of the fears you have in the market are actually phobias defined by that fact of it's irrational fear. Irrational fear meaning actually poses no threat, it's just your mind has warped it into feeling like a threat. So when I was going to clinics and I have a 7-year-old child who I haven't even put, I'm not going to inject, I'm just going to put a mirror in their mouth and check, and they're screaming and crying and panicking. That is a phobia. There's no threat, but they perceive an uncomfortable, unfamiliar environment, and they think something's going to go wrong based on a previous traumatic event or based on their parents' reaction, you know, these kind of things. So we had to study it, and fear is a very important one, and it's a big one in, or dental phobia, it's a big one. So what I've understood from fear, based on my own experiences, based on my psychology background, and also just reading around in the trading space, fear is an important one. And I want to start off with the analogy of a dog, let's say, a dog or a spider, let's say. Now, let's say a 5-year-old child sees a nice fluffy Pomeranian, and initial instinct is, that's a cute fluffy dog. It looks like the teddy bears they have, and he wants to run towards it. He wants to kind of play with it. He wants to kind of cuddle it. A very innocent, childlike curiosity, an open mind. And then once the child goes towards it, that dog just barks. Maybe it's not even a threatening bark. Maybe it's a playful bark, but it barks. And that really shocks the child. The child is not expecting that sound. It's not expecting that aggression. And immediately starts to cry. The child will naturally start to cry. Now that child has had an open mind, and then a stimulus, and then a traumatic response. Therefore, emotions of fear came out of that. We don't live a life of constantly thinking intentionally, because our brains will not be able to keep up. Our brain is designed to find optimal routes to reduce mental load. Meaning to say, right now I'm sitting and I'm talking, but I'm moving my hand, I'm holding a mic, my pupils are dilating and constricting based on the light. There's a lot of subconscious, autonomous things that are happening right now as a human, but I'm not thinking about them actively. So when you go about your life, you're going to be doing a lot of things in this subconscious autopilot, and the way that works is you'll do a behavior, and then when you realize there was a positive outcome, you'll look to strengthen that neural pathway, and repetition creates familiarity, strengthens that neural pathway to the point where you do it subconsciously. For example, driving. How many times can you drive home without actually thinking about the directions or even thinking about changing the gears and steering? You can actually do a whole car journey on a phone call, not even think about the journey, and then you just find yourself arriving at home. That is subconscious competence, that is autopilot. The human is designed to be like that. I mean, our reptile mind is very simple. It's going to be just creating feedback loops of positive or negative in a simplified way based on our survival, things of procreation, eating, survival, and so forth. And therefore, that child with the dog essentially is going to see a a threat, is going to perceive a threat, even though nothing happened. It's perceived a threat because it was a loud noise, it was an unexpected situation. And then that stimulus has led to the mind being fearful, an emotional reaction, and now a feedback loop being created in the mind that dog equals danger, equals fear, equals avoid. Okay. So let's say now that 5-year-old child is now walking down the streets a few days later and it sees a dog. And this dog is a very happy, playful dog, very calm dog, very... the perfect dog. It's not a threat. It's never bit a human. It doesn't bark. And the child sees it. The child is going to probably avoid it and most likely even burst into tears upon sight of that dog. Now, why is that? It's because it recognized a threat from previous traumatic experience and had a new, uninformed response, irrespective of the current situation, irrespective of if the dog is threatening or playful. He just remembers the past, and that overloads the mind to have the same response based on a previous event. And that's what happens in the markets. You have to realize the market is not coming with a threat. It's not coming with a positive or negative agenda. The market is neutral. The market just is. And we create our own opinions. We create our own beliefs. We create our own mechanisms of positive or negative feedback loops. And all of that becomes internal. So if you are someone that approaches the market with a free-flowing mind, aware that nothing can be an issue because there is no threat, it's just decisions. We have to understand why in certain situations are we having fear in taking a decision where we see prices giving us a sell signal. We are supposed to get in, but because we just took 2-3 losses in a row, we hesitate. And then we see price tap into our entry and we just hesitate. We don't take the trade. We think, should we size down? We think, should we increase our stop loss size? Should we wait for a reaction? Should we wait for further confirmation? And the trade starts to go away from your entry. It starts to go towards theoretical profit. And now you're thinking every pip that it goes lower, you're thinking, damn, I should have got in. How can I get in? You think, oh, should I get in again now? Or let me wait for a retracement. And it goes further and further. And as it goes further from your entry, the risk increases to get in. And eventually you just don't take the trade. It goes towards your profit and you're in more mental chaos now. You're like, damn, why didn't I get in? If only that would have paid for my losses. And now you're in a heightened state once again. All of that thought, all of that turmoil was all in my head. The market didn't do anything. That was all a self-inflicted conversation, self-inflicted pain, self-inflicted paralysis. And in the end, there was no threat, in fact, a positive outcome. And the same happens in the opposite, where we have a winning streak, and then we get in on a trade that probably we shouldn't get into, but we're feeling overconfident. We're feeling like, yeah, we're on a hot streak. You justify it by saying, yeah, I've got a profit buffer. You overlook certain things because as the mind is designed to enforce its beliefs. And what that means is if you see something that is slightly in your favor, your mind will overemphasize its importance. And if you see something significantly against your belief, your mind will tend to steer away from it. Meaning to say, you give importance to things that you believe, even if the evidence is small, and you'll disregard a mountain of evidence that is against your beliefs, even if you see it, because the mind seeks to be right. The mind looks for the path of least resistance. The mind looks to prove its beliefs. And therefore in the markets, you will see a trade that is average at best, but you will still think it's a great trade because of you want to be right. The brain looks for confirmational biases, plus overconfidence means you will actively enter a trade with more risk than you should, or enter chasing a trade and an incorrect decision. That's the same side. That's greed, that's hope, that's desire. And these are also reckless things. So when we start to address that the market is completely neutral and all of these emotions are just out of thin air, they're just in our heads, they are biological wirings based on our states of survival, procreation, and other survival instincts. And it's just hardwiring that we have to be aware of and therefore overcome. So if you go to that child now and you tell it, hey, don't be scared of the dog, it's okay, it's okay. The child is not going to care. The child has already made his decision. So if you have to realize this is a hardwiring we have in our biology from our reptile brain, the old portion of our brain, the part of the brain that is not active, therefore not the frontal lobe, which is something you can be very conscious of and override. This is a instinct. And instinct is harder to override because it's there from birth with the enhancement of nature and nurture. So with enhancements of nurture. So I think the way to address it, and this became a lengthy portion, but I'm just going about my day, and I thought let me just jump out and kind of speak about this because I had a losing period right now and the emotion of fear came out. maybe not fear is the wrong word, because I wasn't scared of the market. I was just fearful to get in. Therefore, my fear is not upon entry. My fear is actually upon an unfavorable outcome or an undesirable outcome. Now, if I can logic myself into just take the trades, follow the plan, that's very easy to say. But if I understand my root cause of my fear is not entry, it's not the market, it's of loss. It's a fear of undesirable outcome. How can I override that now? Well, it's first of all understanding undesirable outcome essentially means losing too much money. So I can minimize that. I can say I size down. And what I did a couple months ago when I had a hot streak, I had a lot of wins. I realized this is abnormal. I don't have this many wins ordinarily. In my backtesting and data, getting this many wins in a row is not common. And as each additional win comes, it gets less and less common. So I know that it's not like I'll endlessly keep having wins. Eventually a loss is going to come. So I realized after a certain winning period, I sized down, even though I'm on a hot streak, because I knew overconfidence was coming. And I knew the probability was stacking against me as each trade went. The likelihood of me having 4 winners in a row versus 5 winners in a row versus 7 winners in a row, it gets less and less and less likely. So if I know data is not my side, probability is not my side, and overconfidence is weighing on me, I knew to size down and have a cool off. And even if I have a win or loss after that, it's okay, because I'm doing this to protect mental capital. So you do the same in a loss. When you're going through a losing period, yes, you can say, oh, but if you're in drawdown and now you reduce your size, now it's going to take you even longer to get out of drawdown, because let's say it's 1% risk per trade and you're 5% in drawdown. Maybe 2 or 3 trades at a positive risk reward, you can get back into break even. Now, if you're doing half the position size, 2 or 3 trades became 5 or 6. So then it became a lot longer in drawdown. That can be more of an anchor and then actually lead to further emotions, because you just can't seem to get out of drawdown. So I understand that. But what I usually do is at least 1 or 2 trades after a losing period, I size down just to protect mental capital, because my fear is not the market. My fear is not indecision. I want to take decision because I want to act upon trades I should be acting upon. Therefore, I size down to protect mental capital for just a couple of trades to not feel a detriment of another loss, to avoid me going on tilt. So that's step number 1. Step number 2 is I'll be a little bit more aggressive in my break-evens, and I'll be a little bit more aggressive in considering taking partials or full volume. So ordinarily, as you know, my profit taking system, I did a full video on it a bunch of times actually, is 1 to 3, 1 to 10. I explained the data behind it and the reasoning behind it. But sometimes if I'm in a losing period, I might seek to take full volume at my 1 to 3 upon that session volatility, that session movement. If an average London session on an EU and GU is 20 pips, I'll take my 1 to 3 usually at 15 pips. And I'll take a full volume, because that's going to pay for not just 1 loss, it will pay for three preceding losses. So that builds a mental buffer for me. It gives me a quick win. And as we've spoken about in the past about dopamine is released upon achievement, and it's the motivation hormone. It's the hormone of feedback loops, and it's the hormone to keep you adhering to a plan. So if I can hijack that, because my body does not know the difference, the receptors in my mind don't know the difference of a dopamine release from scrolling TikTok or me making $1 million. The mind is going to have a dopamine, the chemical is the same, the reaction is the same. Now you can think about it different, but the biology is exactly the same. The hormone release is the same, the receptors are the same, the biological impact is the same. So if you can see that dopamine in our body is identical irrespective of the magnitude of the achievement, we can hijack that. Meaning to say, if I'm taking a win, whether it's a 1 to 3 and 1 to 10, and therefore based on my partial system, a full win is 6.5% gain, I can make it 3% gain, and my body's going to feel the same. So I've got a win, I've paid for more losses, and I've got that dopamine release, and I've also sized down. So all of these things will help me protect my capital. I can't justify myself to say, oh, but take the trades anyway and whatever. That doesn't work. When you have fear, it's an irrational response, it's a phobia. And therefore, to counteract it, you have to understand you're fearing an undesirable outcome. So you need to have a desirable outcome as soon as possible. And you need to minimize your risk so that if you do have another loss, you're not fearing an unfavorable outcome even more. So in the losing period, although this may sound like very generic advice of, I'll size down and look to take a partial as soon as possible or full volume as soon as possible, it may be generic, it may be something you already know, but I think understanding the genesis of why that happens and the importance on it from a biology perspective will definitely help you out in a winning and losing period, because in the end, fear is an irrational thing. Fear is there to protect us, and when you realize in the market, it's not protecting us from anything. There's no physiological or physical threat. It's an emotional threat, and that emotional threat is towards an unfavorable outcome. You can wire it in a way where you protect your capital, you create buffers, you create trade management where you only take high probability setups, and you're not going to affect your survival, obviously. So you can hardwire your reptile mind manually to be more aware and therefore more likely to respond in a positive way after a losing period or towards the stimulus of fear. Now I'm going to keep going about my day. I'll pick up the camera and continue to give some thoughts, speaking further on psychology. So I'll catch you later on. I'm going to have a busy day because I'm flying to Bali with the team for an event that we're going to do. I'll keep you updated for that. It's going to be a very special online event for all of you. It's going to be the sickest thing. So we're having a big trip out there with the whole team. But for now, I just have to wrap up affairs before I go. So I got a podcast to film today with a certain individual from Canada who's in town, and my general day-to-day trading, living in Dubai, meetings, and so forth. So I'll keep you up to date. And whenever I get a moment myself to actually sit down and speak about continuing psychology, I'll see you in the next segment.